update we ran on September 22, I could tell you for sure that the situation only deteriorated, taking into account today price action. So we would look at the results here really fast, and then we'll just look at the current update as well, since it's been 3 days, and just to see how the models are reflecting what price action been happening today. Bull trap was confirmed basically already on when we did the last run. It was on Monday, then we did the last run. So by Monday, the bull trap was confirmed. We posted about that on the Twitter. Um, so basically, we only had one bull symbol and four bear symbols. Major deterioration across the board. Only AVAX basically was holding strong. The rest were already down. We'll look into it a bit low in the next slide. Gap warning. Um, Basically again the same signal, basically the same signal, everything deteriorates. Oscillator 7 out of 10 strong bearish signals. So oscillators, the divergence oscillators are used, are kind of like faster indicators in the longer term trends. So basically they indicate ahead of other indicators the change of trend. So 7 out of them again was showing change of trend. So basically just to I want to like the similar analysis we post and basically on the weekly basis and Twitter. So I want to you to better understand what we are uh, showing with them. So even if we don't do a podcast, let's say on some of the days, because we're still unable to be consistent with that. You could still watch that on Telegram and Telegram group, see those analysis, see those presentations, or let's say on Twitter or on our Substack account that we just opened. We've been publishing there pretty consistently and pretty actively on unwrapping and explaining all those things. But my goal today is just to basically prepare you and to read them on your own when you receive them, one or other way. Um, and again, basically, the only survivor is AVAX. So let's go to the next slide. We have basically again same type of different data, but like showing like the severe decline. Basically, a couple symbols improve. Again, pretty similar picture here. We have severe deterioration, massive deterioration, only several improvements basically, AVAX and SUI when compared to previous week. Generally, everything is pretty weak and declining. Key takeaways. Market reality. The crypto market is in a transition phase with bearish divergences dominating. Only one bullish asset, AVAX, stands against four bearish signals. Strength is muted at 52.5 with like some symbols like BNB, Bitcoin, and Sol stronger than others. That might have changed actually based on today's price action. So we're going to check that out a bit later when we look at the what has changed today on the screener side. Again, the same thing that we discussed, oscillators are 8 out of 10 flash bearish diversions. AVAX the only winner. XRP was the weakest performer. Again, with today very weak price action, the things might have changed a bit. So here you could see the overall summary. Basically, week over week comparison analysis sorted by current score. So see here you see the current score. Here you see the score from last week, and here you see the change in score. So again, basically confirms what we discussed. AVAX, the only buy action as the beginning of the week, running a bit ahead. I'm sure that's changed by towards the first day, but today very negative price action. It wasn't only today; it was a couple days of correction and negative price action, which has started around Monday. So when we're doing we especially waited for those analysis and did those run not on Sunday like we usually do it, but since it was pretty aggressive price action heating up on Sunday, we decided to wait till Monday, so it's more reflective of what we currently actually see as the current market state. So here you could basically see the combined results and scores per symbol, 10 symbols on the watch list. We change them, we rotate them. We haven't done any rotation last week because there was nothing standing out, even though Cake should have been added. Cake was the one that we called out and which we believe could be an interesting catch-up play on BNB. So we should probably on the next run, when we do the next update, we'll decide which of the 10 to substitute for Cake. Basically, the probability was towards more defensive play with an 85% probability. Still remains is. So if you're in cash, we suggest to remain in cash. If you have open positions, might be a bit too late. Like Monday, Tuesday was the better time to decrease them, but now it might be a good strategy just to, if you're interested in deploying additional cash, wait for that for sure. If you have no positions opened, you might be using that as an opportunity to enter right now because there is some original correction that already happened. So that's it. That's what I wanted to show on Laxal. Basically, the only bullish symbol, the only symbol which remains bullish is Tron right now. So the only but the only buy signal with a plus. But the rating is actually neutral, basically either neutral or bearish or no, which is kind of expected with a day like that. Let's look at the individual symbols. So we was showing some signs of life based on the indicators. Based on the screeners. So I wonder if I see anything here. I actually don't see anything on SUI. I looked at it earlier today. None of them seem to be at the spot yet. We have some exits. Bitcoin still remains in a buy. The only one probably of the big ones which still remains in the buy, at least by the on one of the daily analysis. Ethereum achieved the target here. Remember, in the uptrend, like that's important detail that I want to add, that those exit signals, they could be basically interpreted in two ways. You could interpret them as an exit, but like there is also take profit signals with like a cross sign. So sometimes it's better not to get greedy and not to wait when there is like a nice extension, like we had, for example, here on Ethereum on one of the previous trades. The extension was 28-30%. So when you have a good extension like that, we usually use a take profit targets, and the same on the way down. There is two ways you could interpret that signal. You could interpret as an additional exit confirmation, as a very strong exit confirmation actually, and you could see that from here it just goes down. And then again, if you are shorting, like, because in a trending market like that, in the general bull market, you have to be careful. Sometimes you don't want to short. Sometimes we've been doing some analysis lately, and they confirm what we've been noticing from before, that a lot of shorting strategies, they don't work in the bull market. They basically generate loss because uh, here, okay, the drop was pretty good. It was like a 16% drop. So if you entered here and here at the take profit target, you already make 16%. But most of the time, we don't get this type of corrections too often. And that's why it's called the bull market. That's one of the signals of the bull market, that corrections are very short, and uh, basically the upside is basically not there. That you ended up with like some slippage and like late entry, early exit, late exit, early entry. You end up losing money on most of the trades. At least that's what our current analysis showing. So we most of the time, um, when we trade in the quant strategies, we'll actually, when we trade in fully automated mode, we actually let the model decide what to do. But generally on the swing trades, on the more like position trades, we don't use it as an exit. We use it as actually an exit signal, but not as a reversal signal, not to go short. But here it was actually a great short trade. And some of our, like it was actually today, I was doing some analysis, and I'll show you later that uh, different different strategies were positioned different for that correction, and some of them were positioned short in for short trades, while others were positioned still for long, and they are probably reversed due to the today's price action. But they were late basically to reverse, and they were probably in some loss. Um, so on Bitcoin is still um, a buy signal, relatively strong, relatively strong. I wouldn't call it very strong, but relatively strong support level. Let's see if it will hold. Most likely the current situation doesn't suggest it. Most likely the price will continue to fall down below uh, at least 105, and basically just retesting that 105, 109 level, or might dip even lower to 100 zone, or or even lower to 90, 95 zone, because that's where the strongest demand is at 100. So I would not expect it to go below the 100 at that point, but let's see. Let's see how tomorrow evolves. Let's see how the night evolves. Hopefully, we'll be able to rebound here. Generally speaking, the today correction was majorly caused by the positive news. The positive news was that's like a weird situation when like you have to get used to the type of price action. Crypto sometimes panics and shows uh, too much emotions on the good news, which is read as a bad news by crypto, because as we discussed again in several podcasts, that crypto is heavily dependent on the Fed action. And today we had a GDP announcement. The result of that GDP announcement was that put me on for now. Uh, so yeah, let's talk about today's GDP announcement a bit. So the result of today's GDP announcement was that it actually went up. So basically, because it went up, the crypto market is not reading it. Like the crypto market is reading it as it's going to result in less likely probability for the rate decrease, since the economy is warmed up, heat up, and the Feds might be afraid of the inflation. I think it's still a bunch of time, and the Feds would have more information to digest. So I think the market have not reacted that strongly to that situation. And we and we will continue to look at it, but like uh, again, I don't think that it would influence the Fed in such a big way. I think there is still time to digest that news. I think the market is overreacting, and that dip might be actually a good dip to buy it, but not right away. Continue to monitor the situation. We're going to go live. We'll try to go live before the end of the week with the week rate wrap up. But like, in case something big comes up tomorrow, in case some interesting price action comes up tomorrow, but that might be it for this week. That might be it for this week. Today might have been it. The GDP might have been the trade of the week. And let's see if that price level holds, and let's see how that news would evolve in general. But again, might be not the bad buying point right now. So let's look at the Bitcoin. Um I would say again, wait for uh, uh, wait for the confirmation. Wait either for the breakup back above 112, 113, or let's see if it's going to go below back to 100, to the white zone. Let's call it 100, 105 zone. Let's see if it will go all the way back down there. Okay, so let's look at the Ethereum. We looked. Tron was holding pretty strong, and I agree that out of all the majors, probably the strongest one. Basically, also still in the buy mode. Symmetric triangle pattern have not been broken. Strength is ranging. Strength is relatively low. We're trading above the supply zone. This correction, today's correction was not so significant for the Tron. Basically, just brought it back to equilibrium. Pretty tight range, pretty low volatility. There was some drop down at Tron a couple weeks ago, which we noted and which we actually took some trades of it. But now nothing notable. Not enough. Not Tron have not dipped enough to make it attractive. At the same time, it's holding pretty strong relative to other coins. Sol, we've been talking a lot about Sol. We've been trading it actually pretty actively. That's why it was like, I mean, it has a very nice price action, and it had a pretty strong run to 250, basically from 200 to 250. Just a couple days, like a week, was insane. And as expected, it turned around like 240, 250 level. It turned around, it had a correction, a bit deeper than I expected, honestly, but that's how Sol moves. It's very aggressive. That's why it's high risk, but also high return. It moved a bit below the expected range, previous time highs, the previous resistance, basically, which is around 210 level. So right now it's basically consolidating, accumulating. Let's see if it would, like, it rebounds. It rebounds. It was trading early at $190 on, which we also called a couple days ago, and which we're expecting to see. So in general, overall, pretty healthy correction. Let's see what it does here. It might go below. because we have a pretty relatively strong supply at around 180, 175, 180 if to be exact. So I would not be surprised if it goes down. The trade that we posted on tweet that we're looking to make is actually either rebounds from here back to 210, back above to back to 205, 210 basically zone. But we're also looking for the dip, so we split it in three parts. Look on Twitter; it's written out there pretty good detail. We explain the logic for this trade and how we basically play in the soul right now. Um, XRP is the weakest one. I agree that with the screener, like we could see here that the patterns are pretty weak. There is a high probability that the break below that equilibrium accumulation zone could occur, and if it occurs, the price might dip down to 2.2 level, so pretty deep, and nothing to hold it in between. So I'm not too excited with XRP, not trading it right now. And BNB is actually finally correcting after the crazy move. BNB had an amazing move of basically 37% in a single, like in a pretty like straightforward run with some minor correction in between of it, but from the previous, like at least 23 from the previous correction. So finally correcting. I could expect and I hope it to go a bit earlier, because right now it's still too high up. The targets for the trade been taken out. Pretty good trade right there. So both targets taken out and the trade is an exit. Again, I would not play it short. I would just interpret it as an exit, because extremely strong bullish momentum for BNB. And I believe the very strong zones are around 800, 840. And that's why I'm going to be looking to enter myself, actually. I would not be hoping for it to go all the way down to 600. Uh, but that would mean that would mean really significant correction. That would be not correction. That would be like a major downtrend in place. So I don't foresee it for now. I think we're just in a correction mode. So more like 800, 840 level looks more reasonable. I also want to look at AVAX, because we've been calling that trade and we've been following it pretty closely. It's also, as we expected, after that strong breakout, it's correcting right now. So we had an exit, a take profit, and an exit on a buy trade. Again, I don't expect correction to be strong enough to catch a short, to catch a nice short. I would see it rebouncing from 24 zone right now. So look out for 24. For now, that's the zone that should be in play. That's where you should be looking to add to the position or open a new position if you're not into it yet. Link is another good one. I am also monitoring it closely. Earlier today, it actually dipped on that high correction, very short-term dip. But it dipped into equilibrium zone. I don't think it will go. I mean, it depends. Like it might if the correction would continue like that. But again, that might be it. So I'm looking for Link, how it's going to behave here, and if that rebounds would transform into accumulation, that might be a good sign to open a new position or add to Link. Again, none of it is a financial advice. I'm just showing you and telling you how I am reading the chart, how my models are reading the chart, how other people models and quant algos that we're using and applying in for practical trading. So I'm just interpreting and showing you How we do it, it's up to you. What size to trade in, how to allocate, what trades to take. It's completely up to you. My purpose is solely educational, to show you and to teach you how we apply those strategies and indicators. Um, Cake is in the correction mode, so the buy trade that we've been talking about and that we've been calling is now exited, and we have a correction mode, which I would expect to go back down, which may go back down to 2.4. So again, watch out, even the wider zone 2.2, 2.4. So let's continue watching. Let's see how the price would evolve tomorrow. Okay, enough for that. I showed you the current price action. I showed you what the models are showing, what the screener are showing, and we went through some major trades. Now, what I want to show and what I want to talk about today, in the end of today's podcast, is, as I promised to you earlier, I want to show you some model portfolio performance. We just created some new dashboards and we're updating them on the website currently. Let's see how is our website doing. We updated it quite significantly over the last couple days. Okay, so now, yeah, we have the updated version. The dashboards still have not been updated, but we have the, the major things are here. So what we offer, the partners, the portfolio performance and trade log. The major things actually not here. They will be here soon. And courses, the pricing for the plans, how to get in touch with us. So all our channels also that I talked about before. So everything is here. But the major thing is panels. The major thing is that. So we're going to add our model portfolio performance dashboard. And here you could actually see the active trades. That's what I was talking about earlier. So I mean, the pretty impressive. Like, I'm pretty impressed with what we're doing so far. Myself, actually, we did not expect such a good performance on those strategies, but the market price action is pretty good. We actually expect some downturn because it's way above average. Like, we expect on average 70% per model, 70% return per year. We're able to basically right now triple and quadruple and 4x on that, which is way above our current expectation. Only one model is performing at expected return, but higher return is not the bad news. But unfortunately, as we know, usually it tends to average out. We are in the bull market, and we even though those models, they trade both directions, they trade both long and short, and around 1 year, like some of them like 9 months. The 15-minute models that were introduced a bit later, so we have a bit less duration for them. But those are an older model that we just show the duration 365 for them, because that's the latest basically optimization and the latest version of it, which we're currently using to generate the trades and to generate that trade log that we're showing here. But all the models are performing great so far. Basically, right now we're just presenting for simplicity for two majors. We have about 3, 4 other symbols usually running. Eventually, we'll present more data, and again, with the subscriptions, you will be able to get access to more major symbols. Usually, we try to have 3 to 5 symbols traded at the same time, because usually that's how many of them are having a strong trends. And the way we select the symbols is what I showed to you in the previous analysis with the portfolio, with screeners and with the individual chart analysis. So some of it is quant based, but sometimes it requires a mix of quantitative analysis combined with visual analysis. And basically, not everything could be coded at the end of the day, but some things are easier to read and some things are too complex to code. So some things like screening is where we still involve human decision making, which it's not fully automated because it requires too many data to be incorporated together, too many different analysis to be combined, and sometimes it's pretty hard to do it all on the flight, even though some of our models are able to incorporate even such things as such a complex models and put all different sources of data together. And I'll present them to you as we evolve and go forward, but usually those are the harder models. As far as that portfolio goes, it's pretty simple. It's 4 strategies, average return to 160%. Total trades is 108 across all strategies, which is pretty representative. So it's like usually we want above 100 trades to make sure that it's like safe enough, diversified enough, and robustness, basically to measure the robustness of the strategies. The best performer is outstanding results on our contrarian ETH Ethereum 15-minute strategy. I usually personally don't like contrarian strategies, but this one is actually working great. Just shows that sometimes it have to be more complicated. Markets get more complicated, and sometimes it needs we need to go contrarian to basically find that edge. So here we have a breakdown for each strategy. Um, Ethereum 1 hour and Ethereum 15-minute. We should make it like I'll improve for the next iteration. We'll make those ones more apparent so it's easier to see which one is which. You could see the last 5 trades for each strategy. You could see for the last 10 trades. You could see the last 5, and then for the last 10, you could see how many of them will win, how many of them will lose. Pretty good data, as you could see, 7 to 3 here, 5 to 3 here. You could see the open positions, long or short, and the date when it was open. So you could basically, if you are planning to enter, you could look against that automation. You could look at against this strategy, which is pretty successful, and just see what it's doing. Just use it as an indicator, see what it's doing right now. It have a good profit factor of 5. Average loss is actually great for only 8.7%, while average win is 38%. You could see here that some of the trades that it does is like 65% win, 35% win, 31% win on the short side. So that's why sometimes it's good like to play both sides, to let the algo, to let the model do what it's trained to do, what it's learned to do. And when it says short, even sometimes it could catch a very nice trade. Um, and here we could see that also great results. This is one of the best models that we have so far with total return of 464 because it trades so often. And basically that's what we want to see. Like we want to see smaller trades within larger trends. So 1 hour trends, larger trends, and stays longer. Like he had like 26 days, 88 days, 22 days, 80 days. So it's not over a trade. It stays for a while. While this model takes shorter trades within overall trend, stays like 12 days. Here it's like only 1 day. It's 5%, 6% in 3 days, 2.5% in 12 days. So it stays much shorter. Also, both long and short, it makes money. win is much smaller, loss is also much smaller. Profit rate, profit factor is still great. So profit factor is still great, and that's what makes this model great. And that's also because of the win rate, because it have 67% win rate compared to 63 here. So like that makes a difference. I'm going to wrap up for today because it's not a good connection. We're going to try to troubleshoot and finally fix everything. Just one more slide, the performance comparison. Um, Again, you could see here on one slide basically three different things. It's pretty comprehensive, but you could see that all strategies are performing extremely well. Even the one that shows the world performance is actually doing great. It's just the fact that other strategies are doing so good that they are well overperforming the, uh, the worst performer, which is actually also a great performer in my opinion and completely in line with our expectations. Um, okay, let me see if I have any of them open. Let's look if okay, so then Bitcoin we actually have a short. Uh, not not like it's uh, nothing outstanding, but in the plus. The short is in the plus. Um, let's see how it would work out, if it would work out to a good trade, but it seems like um, it's I don't think it changed. I think it's the same direction as it was before. Let me close up several things. Let's see the other Bitcoin. It was, I think, 15 minutes. Let's see the hour. I think it was also long. This was an hour. This one, 15 minutes. Okay, let's look at the 15 minute. Might take a bit to load up because of the slow internet again. Okay, also this one is a better short. Around the same price, I would say. It went short here at around 112 and here also at around 112. I guess it just looks better on the 15 minute. But when you look here, you could also see the green zone pretty well. So this trade is in. We could actually just look at here. So we're plus 2.28% in plus on the short trades for the Bitcoin, and on the opposite side for the Ethereum. But that's why it's good to have several robots trading at the same time, because it's never guaranteed. It might catch the direction, might not catch direction. Like the Bitcoin, I think, is in better trades right now, more probable trades to the downside. So you could see the Ethereum is actually haven't cut the even in spite today's price action, we're still in the Ethereum trades. the Ethereum, just to show that it's not never always the plus. So minus 13%, pretty low down. Average 33. So this strategy actually does go down. So that's another thing that we'll look. Okay, it's minus 13%, but it's within the max drawdown. This strategy trades like that. It's still able to make 250% return only in 14 trades. Even if we look to the, because we'll look this one for the last 365 days. So it's a bit different results. 8 trades only, but 63% profitable and profit factor of 5. That's what makes this this strategy unique, because it wins so often and with such a great profit factor that even when it loses, like it might not lose that much because the trade might still reverse, let's say, and go back up. And this strategy knows how to wait. This is the difference between 1 hour and 15 minute strategy. But for the Ethereum, again, to show you our transparency, to show you that it's not only the way up, and like what I showed to you, those strategies still overall yield amazing results. But any strategy, anyone who tells you that their strategy only wins, like, be cautious, because that's not how quant trading works. In quant trading, strategies do lose here and there, and that's part of the game. The profitability, it's never 100%. And for example, right now, Ethereum 15 minutes is also in a loss, and we could see that it's also a pretty significant loss right here. And we actually have several. Okay, no, actually, it's shorted already. It's actually it's exited. It's exited the previous trade, but it lost 12%. And let's see how much it's relative to the max equity drawdown. So max equity drawdown is 17. So again, within the indicators, within the ranges. And now it's flipped to the short. Um, might be too late already, but might be not too late. It might go down, as we discussed earlier. So we interpret one way, but we have a winning model, which successfully over the year period, like 9 months period, we're interpreting it a bit other way. And we trust that model because it wins 65% of the time with 64% of the time with 6.6 amazing profit factor. Um, so okay, that's what I wanted to show you today, just to show you the difference of purely emotional trading and quantitative trading and decision making. Wanted to share some of the strategy results that we have and which we are making more public right now. Make sure to subscribe, post, repost, comment, ask questions, join us on all the media, and let's do the closing with Milan. Hope you enjoyed today's shows. Hope, in spite of the hard day, in spite of the red day, you were able to gain some important insights, to understand how we read the market, to understand how our quant models read the market, to see the difference between the quant trading and emotional trading. I believe that quant models, and especially for myself, and I like, especially on the red days like that, I like to see and to watch what my quant models are doing, because I know that they are back tested. I know that they've been through that before. I know that they have enough data to look into that, to interpret that, and to guide me in the right direction, instead of being emotional, instead of panicking, instead of thinking what to do. I just look at the quant models, see what they do, see if they are acting within the established and expected parameters. I tried to unwrap it a bit today. I'll continue doing that. We're actually recording several courses right now, which would help you to unwrap that even further. So you would be able to basically use those quant models, read those reports, interpret them on your own. I'm here to help. I'm here to guide you. I'm here to show how we use it and how we interpret it. But our ultimate goal is basically to automate it all, so you be able to deploy the models and just manage the deployment and manage your portfolio the same way we do, through the quantitative analysis, through the quantitative tools, and videos like that. Um, with videos like that, we want to basically start that journey for you, introduce you to quantitative trading, quantitative modeling, uh, and teach you to trade, show you how to trade as institutions do it, without emotions, uh, just uh, just very data driven, very risk managed approach. You can lose. The models are built to lose. The models take that into account. So don't panic when the model is losing. Don't panic when the market turns against you. No one wins 100% of the time in no game, in no real world situation. We never win 100% of the time. It's all built in with a good ratios, with a good risk management in the place, with a good portfolio management and diversification, with a proper interpretation and system behind all of it. It's completely doable, it's completely manageable, and you could make returns way above 70% by applying those models to trade crypto. And we're here to help you. Hope it will been useful. We'll see you shortly, and we'll keep you posted through all the channels that we have. Good luck and trade smart, my friends. Goodbye.